So, welcome back, friends. Stocks have slipped Tuesday morning on Wall Street as we kick off the July 2025 month, and which is also the second half of 2025. After S&P 500 notched another record to close out a stunning quarter, S&P 500 has shed 0.3%, while the Nasdaq has lost 0.4%. The Dow is currently down 33 points or 0.1%. Electric vehicle maker Tesla is down 7% after President Trump suggested in a post on Truth Social that the Department of Government Efficiency should look into the government subsidies that CEO Elon Musk companies have received. Musk has criticized Trump's sweeping BBB, or the Big Beautiful Bill, calling it utterly destructive over the weekend. In response to the president's recent post, Musk had written in a post on X that I'm literally saying cut it all now. This isn't the first time that Trump and Musk have sparred over the administration's spending plans. A feud had broken out between the two just a month back, and calm seemed to have returned, but not so. Now, Wall Street is coming off another record-setting session after Canada walked back in its digital services tax. It rescinded it in an attempt to facilitate trade negotiations with the United States. Ottawa's move to rescind the new levy comes after Trump said on Friday that he would be terminating all discussions on trade and with Canada. Traders are hoping for deals between the United States and its trading partners, as Trump's 90-day reprieve on his steepest tariffs is set to expire next week. Stocks made an impressive comeback after suffering steep declines in April, after Trump's sweeping tariff policy pushed the S&P 500 near bear market territory. The major averages have since made a sharp turnaround, with the broad market index closing the second quarter with a 10.6% gain and the Nasdaq up nearly 18% in the period. Although traders now head into the second half of the year with stocks at record highs, many reasons for optimism could rotate that the market could surge even higher in the backdrop of trade agreements being reached with various countries. But the Fed cutting in the second half of the year can also add to the recovery. At the same time, if there are trade agreements which are not quite reached with some nations, that can turn out to be a damp squib. So don't forget that fact. And I think there is every possibility that can happen soon. Fed Chair Jeremy Powell is scheduled to speak at the European Central Bank's Forum on Central Banking in Portugal. And Powell said last week that he expects policymakers will keep monetary policy on hold until there's more clarity on the impact of tariffs on prices. Traders looking forward to S&P Global Purchases Managers Index at 9:45 a.m. Eastern Time, so that's just a little while from now, which will give investors a read on the activity in the manufacturing sector, as well as the ISM manufacturing report at 10 a.m. The job openings and the labor turnover survey will also be released on Tuesday morning. I believe that as we go further into the afternoon session, say after about 11:30, we may see some more weakness creep into the markets, into the US markets, the Dow, S&P, Nasdaq. So be a little cautious, and the weakness can translate into the fall increasing. And to get to know more where the US markets are headed over the short, medium and long term, do join our Prime Plus Telegram group by WhatsApping us on 732-732-2720. Happy investing. Have a nice day.